What's up, YouTube? Happy Thursday and happy early 4th of July. Portfolio is down $2,200 today, but the good news is that we're up actually a good bit on the week. We're up $13,527 on the week, and that's mainly due to Meta, Amazon, and Microsoft moving my way. So if you guys are not familiar, these are three of my biggest positions, and Google is my fourth biggest as well. And ServiceNow and software is actually moving towards the green now, which is awesome because I've been calling this for a while now of this rotation coming out of these hardware stocks that have been blowing up these last couple of months to software and the hyperscalers, which are honestly quality compounders that make a ton of cash every year with a very predictable business model. So this is how we have the week set up to be. Meta had a 10% day yesterday, which was crazy. Let's look at the contract we have here for Meta. I hold this Sleeps contract that expires in 2028, and I have around 90 shares of exposure, maybe a little bit more now, 91 shares worth of exposure for Meta. So here's a week view for my contract. It's up $3,900. Every options contract, you have to multiply it by 100 because it represents 100 shares worth of exposure per contract. So this contract was actually up $7,700 on the week, which is 31%. And that's just the leverage you get with Leaps, which is insane. So let's look at Meta here. Meta introduced to the market that they're running a cloud business because they're running so much compute, and they're going to rent out that compute and compete with AWS, Microsoft Azure, and GCP, for example, that rent out their compute and infrastructure to the market. So super bullish because the whole negative sentiment around Meta was that they're building all of this compute and they're not going to be able to monetize on it. But now they're showing the market that they can. And I think it's great news, and the stock represents that. So I'm super happy with that. And that was always the plan, guys. I go back into the videos. I've talked about this. Like, they're building a lot of compute. They have 3.6 billion active users. They have a lot of people that use their platforms. They need the compute, but if they have excess compute, they're just going to sell it. They have so much of it. So, that was always my thesis. And that's why I went long Meta at the start of the year, because I think this is a great company. They're still accelerating revenues, even spending that much money on AI. So that's a big driver of the portfolio. If you look at the week chart for Meta, they're up 5% and giving back some of those gains here today, which I'm not sure what's going on. It's just having a negative day, I guess. The Qs are down. So I guess a 10% day for Meta is very unusual. And we went from a 560 to a 622 price target in literally one morning, which is insane. The account was up like $9,600 yesterday on those news, mainly coming from Meta, which was around $5,000. And Amazon also had a phenomenal day yesterday, and Microsoft too. So it was a conjuncture of a lot of these different underlines I have. Software has been finally showing signs of life again, and ServiceNow is finally back in the 100s. So let's look at ServiceNow here for a second. Software in general has been kind of lagging behind, and that's because people think that AI is going to kill the sector. But it just goes to show that, ServiceNow actually had an upgrade, a buy upgrade from Guggenheim. And if you look at their month chart, they're still down a good bit. And I have a $96 basis. So this represents an 8% gain so far on the stock. And I'm holding this until it gets to 210. I'm doubling my money or nothing. I'm just kidding. I mean, if it gets to 210 this year or maybe next year, I'm not sure when it will, but I'm very bullish on ServiceNow. They work with more than 85% of the Fortune 500, which is just incredible. They have so much market share. And if you look at year to date, they're still down 31%, which is insane. As you can see, we saw like a little bit of a rally here back at the start of June, but then all those gains were given back. And I think now we're consolidating again into having another big push back to all-time highs, which hopefully happen sometime soon. But this is what we got for ServiceNow and the software sector in general. Palantir has actually been my biggest gainer percentage-wise these last couple of weeks. So let's look at Palantir here for a second. And this company was reaching 52-week lows last week, and I bought that fear. My basis right here is 109, and this position is up 18%. Which is crazy. I just saw Palantir trading at a 52-week low, and I'm not even necessarily the biggest fan of the company. Like, I like Alex Karp. He's a little bit crazy, but, Palantir trading at a 52-week low is just, in my opinion, such a good position. And this is not financial advice. None of that I say here is financial advice. This is what I'm doing with my money. And if you're still watching here, don't forget to subscribe. A lot of you guys are watching the videos are not subscribed. So don't forget to leave that subscribe and leave a like. I appreciate being here. But talking about Palantir, they hit 52-week lows, and now they're bouncing off of those lows with the 17.9% return here for our position. And I have a 109 basis. And this is more of a speculative play. That's why I only have 1.1% of the portfolio on this. For now, keeping this at a 1% play, I think it's fair. It just gives me a little bit more of exposure of these high flying companies trading at a higher multiple like Palantir and Zeta Global, for example. That is another play that has been performing super well here for the portfolio. So if we look at Zeta Global here, for example, they're actually trading down on the day, just like the other underlines that I have. But let's look at the week chart. They're up 8% on the week, hitting a weekly low of $17. I started buying my shares and I have an average basis of 18.45. And again, this represents 1% of the portfolio, a little bit more speculative. Zeta Global has a lower market cap, so they're not necessarily a super proven company. But talking about the position, it's only a 1% position, and these are the satellites and even like speculative bets here for the portfolio that I like to keep at a 1% level. And this is up 11% on just a week or maybe week and a half of buying into the stock. So if you guys look at my purchase orders here, I was buying Zeta on June 26th, June 25th, on the 24th. And then on the 23rd is when I found out about this company and did my due diligence. They were trading at $19, and I was able to get a couple of shares at 18.1 and 18.5, which brings my total average to about 18.7, like you guys saw. So trading down on the day, unfortunately, but that's okay. We had a phenomenal week. Like I mentioned, we had a $13,000 week, which we were up to actually a $17,000 week a couple of days ago, which is really cool, at all-time highs here for the week. So the portfolio is finally recovering. I think people are starting to understand that the hyperscalers are here to stay and they're phenomenal companies. So the jobs report actually came in this morning, and it came in worse than expected, but it's actually a good thing for risk assets. So if you're not familiar, the Federal Reserve has a dual mandate. They have the mandate of keeping maximum employment and keeping inflation at 2%. But they actually contradict each other, because to keep inflation low, they have to raise rates. And whenever you raise rates, unemployment goes up. So having unemployment go down is actually a good thing, because it means that the economy is healthy and that the Fed doesn't have to raise rates at the end of the year. So it's good for risk assets, because we were pricing in a raise hike at the end of the year, with Kevin Warsh being the new chairman of the Fed, and he hasn't given guidance yet. This is just speculation that we have and predictions from the market and people like me that are thinking about these things. And, this gives us more clarity on where rates are going to stand. I do think they're going to keep rates steady where they are, because as you can see, inflation is actually trending up a little bit, which is not ideal, but that's mainly because of the energy crisis that we've had in the Middle East. So hopefully we get to remain with rates where they are, which they're somewhat elevated, but we are in a cutting rate environment. So next year we'll probably see a couple of rate cuts if the economy keeps trending the way it is. And who knows, we might have inflation pick back up and Trump start another war, whatever it is. It's super unpredictable. We'll never know what happens, but what I know is that there's a lot of money flowing into software and hyperscalers. And I think the market's finally realizing that these companies are phenomenal companies. They make a ton of cash, and a little bit of a rotation coming out of AI semiconductor stocks like the Microns and SanDisk of the world. And I'm not saying that the AI semiconductor cycle is over. I just think that there's a lot of money rotating out of it, because they understand that it's been running hot. I mean, like, look at Micron. They've gone up like more than 200% on the year, which is just insane. So, this is what I think of this, and I'm positioning my portfolio so I can benefit from it. I think this week has been a good example of that. And we had a $13,000 week, and hopefully the following weeks will be very similar to this. And we can get this portfolio back to 200K and at $300,000 by the end of the year, which is our goal. So talk a little bit more how I'm going to get to that $300,000 mark. So as you can see, Meta, just as a total return basis, it's not daily returns. This is a total return standpoint. As you can see, my Amazon contract's up 24% that I'll probably sell in the coming months because it expires in January. I have my Meta Leaps right here, which we're still down $4,000, about 12%. But I think this is going to change, especially with the sentiment around Meta changing. And crypto has been a disappointment, but that's okay. This is a peak fear for crypto, and I've been buying and averaging down here and there. I'm not necessarily adding to my positions. I still have, around $15,000, and I'm down like $3,000 to $4,000 on both of these. As you can see, like I'm down $3,300 on Bitcoin and $1,200 on Ethereum, representing 20% and 26% drawdowns. But I'm overall long-term bullish on these assets. And once we have another bull run on crypto, these are going to go back up to all-time highs, and it's going to be a good day. And buying Ethereum at these prices, I think, is a steal. I already have 3 Ethereum and 0.15 Bitcoin, which for right now, with my allocations and my portfolio, my money, I think this is enough exposure to crypto. And this is what I have here for the public account. And when we talk about stocks and my returns as of the last 12 months, let's say, Google has been a phenomenal underlying. I have 134 shares, and I was buying this on the tariff lows last year and added a little bit more to my portfolio last year as well and just let this ride. They've had a phenomenal year. And when this was at all-time highs, we're actually closer to $33,000 worth of gains, representing 115, 120, 130%, depends where you see it. And Microsoft has been a new position for the portfolio. We're overall down on this stock, but as you can see, it's quickly changing. This is actually having a great day today, and last week was actually a great week for them too. And this is all cash. So I've invested like $40,000 into Microsoft, and I think this is going to have similar returns to Google. I hope. This is not financial advice, just what I think of this. And ServiceNow, as you guys know, is a big position for me as well. I have 84 shares representing around $9,000, and this is up 8%. A couple Amazon shares right here, only 11 of them, representing a $700 win. And I got a couple more shares of Meta right here with a 6% return so far, which I was able to time that pretty well. Marvell, which is my AI semiconductor stock that I like, is down 17%. And this represents the rotation that I've been talking about. And I still wanted some exposure to Marvell. And we'll see when we trim this position, or maybe we'll let it ride. I still think that this trade has legs to go. Maybe we'll see a little bit of a cool off on this trade for the next month or maybe 2 months. But then we get some good news again, and then Marvell's back ribbon. I still think this is a great company, and it's not necessarily extremely overbought like Micron, the other ones, for example. I have Robinhood here for my fintech play, up 8%. Palantir that we just covered, 18%, representing $310. Robinhood with 8%, and Zeta Global 11%. So this is how the portfolio sits right now. These are some of the losers right here, more speculative plays, not SoFi, CoreWeave, or Coherent, but we got Rigetti, IronQ, QBTS, ASDS, Rocket Lab, and SpaceX shares right here at the bottom with only one share IPO. And these are more speculative plays, and it represents, I mean, we're down 25% on some of these, and my timing wasn't necessarily the best there. But as overall, when it comes to portfolio allocation, this represents, 1% or maybe 1.5% of the portfolio across all of 4 or 5 of these names. So this is where the account's sitting right now. Let me know what you guys think of the portfolio. We're up a good bit here on the month. As you can see, we've had a good trailing 3 months. We're actually still down on the month overall, starting May 31st when it was our all-time high. But we're climbing back out of the hole. The account was actually down to 152 not very long ago. So we're actually up $13,571 on the week, still down on the month, like I mentioned. On the 3 month, we're up $20,000, which represents 13.5% of the portfolio. And I'm happy with that. Year to date, we're up 3.4%. And that was a little bit higher the other day, which was 4.6%. And we're climbing back to the positives. And this is just what happens with the high beta portfolio. Sometimes you're going to be underperforming for a couple of months, and then you're going to have periods of outperformance, like, for example, this week, and hopefully the following weeks that we see of this year. So hopefully you guys enjoyed the video. Don't forget to leave a like and subscribe. A lot of you guys are not subscribed to the channel. I appreciate you guys being here. Let me know what you guys think of these plays. I'll talk to you guys soon.